Crypto prices are up, down, all around. They're all over the place. Depending on when you bought it, you might have experienced a heck of a loss. You might have experienced a pretty incredible gain. But what do you do? How do you extract it from Coinbase or wherever you've got it? How do you pay taxes on the gain? There are a lot of financial questions related to cryptocurrency and how to make use of it. Our next guest is Jason Heath. He is a certified financial planner, advice only planner at Objective Financial Partners and Objective Tax and Accounting. He joins us now to talk about what to do with your crypto. Hello, Jason.
Hello, hello, Bruce.
Now, crypto's obviously been a thing for many, many years now. It has crossed over into being something that, regular Canadians hold, not just those early adopters. Let's say you bought on a dip and you're in the green. How do you go about securing the profit?
You gotta sell, you gotta turn it into cash, something you can use for another purpose, but that does have tax implications, and those tax implications kind of depend on what your activities have been. Some people have bought and held or hodled or whatever you want to say, and usually that's taxed as a capital gain. But people who've got into other sort of crypto activities, buying and selling or mining or staking, may have business income implications from their crypto profits.
How does the CRA determine what you've been doing with your crypto? I mean, I understand how they're integrated to the brokerage houses, and if someone lies on
Yeah.
their tax return, they can go back and get their records at source. How does that work in the crypto world?
It's a good question. I actually don't know for certain to what extent there is disclosure that's made from these places to the Canada Revenue Agency. Canada Revenue Agency has all-encompassing abilities to obtain information should they want to. But it really is incumbent on the taxpayer to get things reported properly. And there's a lot of people that don't understand exactly how it works. So because crypto is not a government issued currency, even if you switch your crypto from one to another, that's considered a sale. That's considered a capital transaction that could give rise to a capital gain, hopefully a capital gain as opposed to a capital loss.
So to be overly simplistic, is it fair to say that it's similar to a capital gain that you might have if you bought Nvidia shares a decade
Yeah.
ago and then you sell them today and they've made a gazillion dollars?
Exactly. And that would apply whether you sell it and turn it into cash, turn it into Canadian dollars, whether you transfer it from one crypto directly to another cryptocurrency, or even if you use your crypto to buy something. Exchanging your crypto for something is considered a transaction that results in a capital gain or a capital loss, or again, in some instances, business income.
Does the phrase deemed disposition apply? Is that correct in saying that?
Exactly. I mean,
Yeah.
effectively,
Okay.
what you're doing is I think the Canada Revenue Agency refers to it as a barter transaction in this case, where you're deemed to have disposed of your cryptocurrency when you use it to purchase something else. So it's different from cash.
Yeah.
Government issued currency, Canadian dollars, you don't have capital gains and losses, but cryptocurrency, you can.
Now, you talked about the business income thing. Can you talk a bit more about some ways people are earning money, like mining? I mean, I know this is a thing, but I don't even know how you would account for the profit you make by mining.
Yeah, it's a good question. And I have seen very few instances of reporting in real life, but I know that some of the crypto exchanges, or depending on where you hold the crypto, you may get a report or a summary that you then need to turn into, what is my income that has been generated from these activities. And again, often that may be considered business income. Same thing if you are moving in and out of cryptocurrency on a regular basis. You're doing sort of what might be considered day trading, frequent transactions. You're very knowledgeable and trying to earn a quick profit. That might be something that the CRA considers business income. And unlike a capital gain, when you have a capital gain, 50% is taxable. Business income is fully taxable. You don't want that. And there's no fine line where CRA says if you do 12 crypto transactions, that's business income. It kind of depends.
Where does HST sit here? Because when I think about business income, if your revenue is in excess of like 30 grand or something, you need to register for a number. There's a whole other thing you have to do.
Yeah, generally that wouldn't apply in this case, thankfully, but the business income hit can be pretty substantial, especially if somebody makes a big profit on crypto.
So
Usually
we've
the people
talked,
who've made a big profit though, bought low, held, sold high, and
right.
certainly there's lots of deferred capital gains that people are sitting on.
As a prep for this conversation, I looked at the chart on crypto, and it is very easy to have had a loss on
Oh,
crypto,
sure.
depending on when you bought. How does that work? Can you, like you would with a stock, take a capital loss?
Yeah, you can. So again, cryptocurrency is considered a capital asset. You can have a capital gain, you can have a capital loss. The way that a capital loss works may not be the way that people are hoping, though, because you can only deduct a capital loss against capital gains. You can claim a capital loss that you've had this year against capital gains this year to reduce your capital gains overall on a net basis. And if you have a net capital loss, so you've got more losses than gains in a given year, and we're talking about taxable accounts, so not RSPs, not TFSAs, taxable investment accounts, that loss can be carried back up to 3 years to offset previous capital gains. You can go back in time, get a refund for a previous capital gain.
Wow.
Otherwise, you carry the loss forward to use against capital gains in the future.
We use this word cryptocurrency, but it's a basket term because it could be Bitcoin, it could be Ethereum. There are a whole bunch of other ones. Is there anything as it relates to tax that is relevant to what type of crypto it is or where it's, I don't know, sold or mined, or is it equivalent to a stock? It doesn't really matter.
Generally not. I would say it's equivalent to a stock. There's typically no withholding tax on crypto income either, which can sometimes make holding like foreign stocks, U.S. stocks, for example, that have withholding tax that goes to the Internal Revenue Service a little bit more complicated on your tax returns. But I think the biggest challenge is the um, reporting. You don't get a T5 slip. You don't get a T5008 slip that you would get with capital gains and losses on your stocks. So the reporting is not quite as clear. You're responsible for doing it yourself. I had one client last year that had a ton of crypto transactions, and it was just a mess trying to make sense of all the
Uh,
ins and outs and transactions. So that's one thing to really watch out for, because if you're doing a lot of transactions, again, there's that business income risk, but it's very complicated to then go through and do the bookkeeping for it.
Right. Surely AI can do that for us, really.
Right?
Shouldn't have to do anything ourselves. One of the things that I find really overwhelming when it comes to thinking about taxes is timing. Like, which tax year should you do it? How do you offset this versus that? How do you try and minimize income in certain years so you don't exceed the threshold on, whatever? What are some timing considerations that someone who's got that one windfall might want to think about such that they don't extract that value and take that gain or loss all in the same year? Does that matter?
It can, and it's a good question. If somebody has a low or a modest income and they have a big capital gain in a given year, they could have a lot more tax than if they split it over 2 years. If somebody's got a relatively high income, a high salary, a high pension, whatever the case may be to begin with, it may not make a difference. If you're in the top tax bracket in one year versus another, I mean, maybe you've got to pay this year's tax a year earlier, but there may not be an overall tax savings. I think people need to be careful as well. If you were to try to split a profit on crypto or a stock or whatever the case may be over 2 or 3 years, you've got investment risk. You might want to turn it into cash. You may not want to pay the tax this year, but holding off until next year or the year after, if the value were to decline, you've also got to be mindful of the fact that you're taking investment risk while you wait to maybe save a few dollars in tax. Is it worth it, or should you make your investment sale decision as your primary motivator?
There was a time in which there were people who were concerned about having that crypto gain or even just the asset locked in an app somewhere. I mean, there's these stories about suitcases disappearing and people dying and all that
Yeah.
sort of thing. In today's day and age, is a crypto investment relatively easy to convert to cash? Is it relatively secure? Or is it too complicated for us to even make a declaration about the safety of that asset?
I'd say relatively easy. Depends where you hold it. It's getting easier to hold it through regular Canadian discount brokerage platforms. Some people don't like that because their whole reason for holding crypto is to break free from the traditional financial system and hold it offshore or through a wallet or whatever the case may be. But it's easier for regular people to buy crypto. You can even buy crypto ETFs that trade on the Toronto Stock Exchange or the New York Stock Exchange as well and own them in your RSP or your TFSA. So it's becoming easier to buy it, easier to sell it, and it's interesting, but it was meant to buck the mainstream, and now it's becoming mainstream.
Yeah. We've talked mostly about your tax side of your brain, which you do. You do a lot of work in that area. You also do a lot of work in financial planning.
Mhm.
What broad wisdom would you have, or questions would you ask for a client about how much is too much in terms of my asset allocation in crypto?
So, an interesting anecdote that I'll share is that we have clients who are older, we have clients who are younger, everywhere in between. And I'd say the majority of them don't hold crypto, which is interesting. Certainly, we have clients that own crypto, but I would say they're the minority of the clients that I come across in my day to day. Um, I'm always cautious about an investor holding too much of their portfolio in a single investment. My own rule of thumb is typically once you get more than 5% of your overall investment portfolio in a particular security, that's I'd say yellow flag.
Mm,
10% is a red flag. Lots of people who own cryptocurrency own a single cryptocurrency and have most of their investment portfolio in it. So, I mean, flashing red,
right.
warning signs everywhere.
Right.
And at the same time, there are people that have made a lot of money holding crypto. People have made a lot of money owning Nvidia or any other shares. I've seen lots of millionaires from having too many eggs in one basket. The majority of people who become wealthy do it in boring, slow, steady ways over time.
Yes.
So, dumping all of your money into a single investment and crossing your fingers, you might get lucky, but
Right.
most people don't.
Or you might not. Well, I love a little bit of boredom. This conversation would not fit that, would not fit the bill. Interesting to talk to you, Jason, and thanks for bringing us your perspective on
Thanks,
crypto. We
Bruce.
appreciate it.
Always a
Jason
pleasure.
Heath, certified financial planner. He's with Objective Financial Partners, and he was here to talk about crypto, what to do with a capital gain, what to do with a capital loss.